All right, Bill, coming over to you. Bill, you're a bit of a contrarian. You actually do not believe that these tariffs are inflationary, but I do have to ask you, after we heard from the Target CEO yesterday saying that produce prices are likely going to increase as soon as this week, that's just one part of the economy. How do you still hold on to this idea that they're not inflationary when you're seeing a leading retailer tell you that's going to raise prices?
Well, let me ask you, Frank, if you start to raise the price of something like peanuts, right, what are you going to do? Well, you can eat less peanuts, but you're going to have more cashews or find other substitutes. And that, to me, is really the basis of why it's not inflationary. It changes relative prices, but the overall prices, as we've seen from the first experience of the Trump administration, it only went up by about a percentage point of CPI over a 2-year period. So people do find ways of getting around tariffs and finding other things to consume that get them the same kind of results without having to consume the high price stuff. People adjust, and I think that's the thing that people forget. A lot of economists, when you scratch any economist, you talk about trade wars and the terrible things that tariffs can do. But honestly, people are pretty smart, and producers are very smart in finding substitutes. The stock market we actually just talked about, GM and all the automakers are saying, hey, this gives us an opportunity to re-optimize our production, maybe shift more production back to the United States, and more importantly, get foreign money to come invest in the United States to have our suppliers much more domestic and to rationalize our supply lines even better.
All right, so to that point right now, we're looking at the automaker stocks right now in the pre-market, seeing Ford, GM, Tesla, all moving higher. I believe Stellantis was the best performer, up over, I believe, about 5%, but it just went by for a second. So, Bill, I do have to ask you, so if you're saying that people are smart and they just work around these tariffs, then why would we see a bounce today on a compromise? If the tariffs aren't in fact inflationary and they're not as disruptive to the market as many people think, then wouldn't the idea of a compromise, wouldn't that just kind of be news but not impactful to the markets? And instead, we're seeing what looks to be a rebound, and John believes it's due to this idea that there's a compromise.
Well, Frank, I think the real reason why the markets are reacting is because President Trump reminded everybody that tariffs are just one tool in a wide range of policies that he's being put in place. And people are not emphasizing enough the rest of the policies. He's going to shrink the size of government. He's going to deregulate the economy. And to me, the most important thing he's going to do is to get more capital to come into the United States, even from China. He's told us that his objective is to maximize the employment and income of American residents, and that is where the optimism is coming in. People are relieved to find that we're back on the investment track again. We're going to deregulate, cut taxes, find other revenue sources other than income taxes, and really try to revive the economy in a way that hasn't been done before. We've tried CHIPS Act, where we have direct subsidies, but tariffs are a way of packing a punch that subsidies don't. Tariffs raise revenues. Subsidies cost the government revenues. The subsidies like the CHIPS Act is something that blows up the government deficit. But tariffs are a way of giving the same kind of protection, encouraging people to come in and invest under the tariff barrier, and at the same time raise revenues. So these, I think, are facets that have not been talked about enough.
So, Bill, you actually believe that Wall Street and the rest of the country is seeing optimism from the president's comments. But, John, I want to come back over to you. I mean, we've seen GDP estimates lowered. The Atlanta Fed's GDP now, one that a lot of people are citing, going from 1.5% when we were talking about a Q1 decline, now down to 2.8%. And also, we're getting stuff from J.P. Morgan, their trading desk turning very bullish about U.S. equities. I want to ask you, if there's optimism out there, where is it? Because we're not hearing it from traders. We're not seeing it from economic estimates. Are you optimistic about the direction of this market despite the sell-off?
Yeah, we are very much optimistic about where the economy is going. I think what is fairly well understood by business and many investors is the fact that this is, for once, in terms of the national debt, we're not kicking the can down the road, but rather addressing it to an extent that has not been done by any administration, either side of the aisle, that we can recall in recent years. And in addition to that, this looking for a better competitive stance to the U.S. should not only be good for the U.S., but should also be for the trading partners, in particular in the move to diversify away from one country-centric global supply chains.